We have Daniel, who is the COO of Fasset. It's a regulated exchange out of UAE, Malaysia. They are doing some very cool work on tokenization, which is another application of technology in this particular area. They are tokenizing gold, which we all know is very popular for Pakistanis. They are doing Sharia compliant work. So I'll ask those questions from Daniel. We have Sardar Ahmed Durrani. He's the head of investments of Genesis Digital. Genesis is the second largest crypto mining company operating primarily in the US and planning an IPO on NASDAQ fairly soon. He used to be in the PE space before. And we have Ayad Bhatt, who is the SEO. He runs Zodia Markets, another regulated crypto exchange out of UAE. And they are 85% owned by Standard Chartered. So another example of a large traditional financial institution getting into the area of digital assets in a regulated form. And what I'll discuss with Ayad is more from the experience of how it is operating in a regulated environment. How do you overcome the concerns around some of the issues regarding risk, the issues regarding KYC, AML. I've given a little bit of your backgrounds, but again, like we did in the last panel, would be great if you can run us through your journeys.
Absolutely. Is this on?
Okay. Can you hear Daniel? Okay.
Excellent. Amazing. Assalamu alaikum, everybody. Nice to meet you all. I'll just quickly run through it. I'm a British Pakistani. I grew up in the UK. My family's from Lahore. I was just telling these gentlemen who are alumni of LUMS that if I was born here and bred here, I would have gone to LUMS. I would have tried my best to get into LUMS. So when I heard that the LUMS was setting up a center for digital assets, me and Ali Bhai, we've known each other nearly half a decade now, I think. We've been speaking about crypto in Pakistan for a very, very long time, and kind of the opportunity that it can bring to Pakistan. So very glad to be here, and thank you to everybody who's instrumental in doing this. As the esteemed vice chair was saying, that I hope that this continues, and whatever experience that us and the previous panelists and other people can bring from our work cross-border, we would love to do that and help set up crypto and digital assets in particular for Pakistan. My background very quickly, Mohammed Yasser Haq said a few things that actually overlap with my background. So I used to work at the Prime Minister's office in the UAE with my co-founder. We were working for His Excellency Omar Al-Ulama, who is the Minister of State for Artificial Intelligence in the UAE. Prior to that, I was at Deloitte in the UK and New York, looking at fintech for banks in particular. So I have a lot of experience in the tech space, not a tech background myself. I studied economics, actually, at King's College in London. But the convergence between tech and finance has been my passion for the last 15 years or so. We run a regulated platform, as Ali Bhai was saying, in 8 jurisdictions globally. We're fully regulated and licensed as a crypto asset service provider in Indonesia, Malaysia, Turkey, UAE, Bahrain, and soon, hopefully, in Pakistan, when the licenses and the regulation are available. We have nearly 500,000 customers globally that have interacted with our app. We run a retail application, both for crypto assets, and as the lady was mentioning there earlier about the risk associated with crypto, we also are distributing tokenized real world assets. So one thing that I want to talk about today, after maybe the introductions, is about the potential of tokenizing real world assets, such as US equities, real estate, gold, other commodities that enable access for people in places like Pakistan who wouldn't be able to access it otherwise. We have been granted from the SECP a gold tokenization permission as well in the sandbox capacity. So we're working on that in Pakistan as well. But really, our thesis is that not just crypto, but tokenized real world assets, of which one example is stablecoins. That is what the emerging markets and the global south need. And that is what we're building basically towards, to enable people to access these type of assets so that they can build wealth, just the same way that we have access to in the West, as an example. So building wealth is a universal right, and that's kind of what we're trying to bring to market. We have other parts of the business as well, which I'll pause on. We can discuss it later, but that's an introduction myself.
So giving financial inclusion and giving, especially for people in emerging markets, by giving them access to real world assets and traditional assets through a digitalized platform. Yeah. Sardar Ahmed Durrani, also an alumnus of LUMS. Do you want to tell more about yourself?
Thank you, Ali. Thank you for having me. I hope everyone can hear me. Really proud to be here right now. It's a very weird feeling being on that side of the stage for so many years now, having the opportunity to sit here. Thank you, Ali, for that. And thanks for Muneeb to set this whole thing up. We've been discussing how the digital space will come to Pakistan for the last few years. We've been trying to figure out if there's companies that are investing in the space, so we entered through that mechanism as well. But you and Muneeb preempted all of that. You guys went straight for the academia to raise it from the grassroots level. So applause to you guys. I was here in 2004. Since then, I went straight into banking, ABN AMRO, RBS, Deutsche. I spent 16 years in Hong Kong doing commercial and investment banking. At my last banking role, I was COO for Asia for M&A and ECM for all the way from Australia all the way to India. Unfortunately, in those days, Pakistan was not part of Asia. It was part of MENA. Then I went to private equity. I covered frontier markets, specifically Pakistan, Bangladesh, Sri Lanka, Myanmar, Nepal. We focused ideally on infrastructure. So we looked at everything from Bhiki Baloki power plants all the way to the government offtake projects that were coming up in agriculture, in roads, toll roads. Then we shifted focus to, because Pakistan and our overall mandate was about frontier markets, the play was always about population dynamics. We're talking about countries like Pakistan, 250 million people, Bangladesh, 200 million people, average age 25 years old, 23-year-olds, 27-year-old. So you've got 100 million people which are sitting within the 20 years of age waiting to consume. And that brings us to the rest of the conversation today as well. So they could consume everything from FMCG to data to education to healthcare services to homes. So our entire premise was these markets are going to be the boom cycle for the next few years, and we came in strong. So I was with a PE shop for a bunch of years. Till recently, I've moved to GDA. As Ali mentioned, Genesis Digital Assets is one of the largest Bitcoin miners globally. We were number 2 when I joined, but as I will explain later, as Bitcoin cycles go, unless you update your machines, you fall back on hash rate, and then it's like an F1 race. Whoever pit stops first is not always an advantage. Those who pit stop last with the freshest tires have a gain. So we're working towards that. GDA has operations in Argentina, US, mostly in Texas, North and South Carolina, and also in Sweden and Kazakhstan. They are primarily a pure Bitcoin miner. So today, in my section at least, I'll talk about Bitcoin and crypto. The two have to be segregated a bit just by the notion of how one has just become the power play for sovereigns, for strategic reserve, and for just value accretion model rather than market product. And in that, so within GDA, then I sit as head of investments. I look at new market openings. So Pakistan being a part of the discussion there. We're discussing it as is with every other country. We're discussing Nicaragua, we're discussing Ethiopia, we're discussing other markets which have large hydro power available, because that's just sustainable. And I also look at and Ali, I want to allude to that, the family office side of the same business, where they invest in AI, robotics, tokens, gaming, and other spaces as well, which also connect to the crypto end of the spectrum. So we can talk about that later as well.
Thank you. And I think one thing which I hope comes across in these interactions is that the quality of people who work in digital asset industry is quite senior. They are people who have serious experience in the financial markets, in the traditional financial sector, who have worked in the global financial markets in the seat of capital in London, in US, in Hong Kong, Singapore. Because I felt that the perception in Pakistan was and is that this is something which is done by gamers or underground or social media influencers, which certainly is not true in the parts of the world where we operate. And similarly, Ayad has worked in global financial markets in top banks. So Ayad, another alumnus of LUMS, so a friend of mine. Ayad, would love to know more about your background.
Assalamu alaikum, everyone. I am a proud alumni of LUMS, BSc 2005, economics major, Dr. Ali Shima. Assalamu alaikum. I did my senior project with Dr. Ali, and I've seen him after a very long time, so assalamu alaikum. So my progression was a bit different from LUMS. I did a course in LUMS which was called Financial Mathematics, and that drew me towards derivatives. So I was on a path away from academia and towards trading. So I went to Michigan after LUMS and then was lucky enough to work at Credit Suisse, Citibank, Credit Agricole, and a couple of hedge funds for about 20 years, and pretty much traded FX and FX derivatives in every major currency in the world. So I was lucky enough to get the experience of emerging markets, African currencies, G10, Euro, Sterling, and then the GCC as well. It was, I think, around COVID when I was stuck in lockdown, and I had a lot of time on my hands, and I got drawn towards crypto from a trading opportunity point of view. So I did not have any sort of philosophical inspiration behind the technology changing the world because I did not understand it as well. But the whole attraction was this currency just dropped from almost 20,000 to 4,000, and now it's rallying on its way back. There's an opportunity to trade and monetize it. But once I started trading and I had a bit of success, I remember that day when I Googled what is blockchain, because I then was inspired to learn more about it as to why it's so volatile. And that then paved the way for me to pivot my FX career and see how can I make a difference in what I've learned at banks and hedge funds and build a business myself. So that moved me back to UAE, Abu Dhabi. I was born there, but I wanted to get close to Pakistan. My parents are here, so I chose Abu Dhabi from a personal angle. And also ADGM at the time was gaining prominence as a regulator of good repute. So that balance made me move from Hong Kong to Abu Dhabi. Initially set up a prop trading shop, which then I pivoted to an OTC brokerage. And currently I'm a partner and senior executive officer at Zodia Markets. We are backed by Standard Chartered, and the core business we're currently operating in is OTC fiat on and off ramps. So any fiat currency versus stable coins, Bitcoin, any coin that clients want to trade, and vice versa, and crypto to crypto. So a big part of our clientele are remittance companies. So we facilitate some of the more busy corridors, Philippine, UAE to Philippine, African currencies is coming soon, Brazil, Mexico, and hopefully, inshallah, sooner than later, Pakistan as well. Family offices, hedge funds, prop trading shops, and more interestingly, from a Pakistan point of view, corporate treasuries. So we have more and more corporates around the world who have USDT, the most prominent stablecoin, on their balance sheet as a mode of payment. So their buyers, their sellers are demanding to be paid in stable coins rather than any local currency. So we've helped them manage their balance sheet. So it's a pleasure for me to be here. Just like Durrani said, it's an honor to come to LUMS in this capacity. I do visit every time because I have friends who, mashallah, teach at LUMS now, so I come to say hello to them. And yes, thank you, Ali, for having me here.
It's a pleasure. And then we have Dan Holmes, who works for Haruko. He used to be the managing partner, managing director at Deutsche Bank. He was head of prime brokerage over there. So deep traditional finance background. And somebody in the earlier session had a question about the risks of putting money in crypto platforms. And Haruko provides technology solutions to some of the largest financial institutions, allowing them access to digital assets in a regulated and secure platform. So Daniel, would love to know more about your journey and as well as about Haruko.
Thank you, Ali. That's a very kind introduction. And it's also my first time in Pakistan and Lahore, and I have to say, the few days I've been here so far, the hospitality's been incredible. So very grateful for that, and I'm very honoured and very excited to be here and to be a part of this. My background is also kind of traditional markets, investment banking, around a decade and a half in foreign exchange and commodities. And I have to say the panel before this one was fantastic. And I can't really do a better job in kind of describing the economic sentiments and macroeconomic sentiments around the sort of things I was beginning to feel a bit disenfranchised about myself in the seat I was in at the time. And it just so happened that I found myself in a conversation with two LUMS alumni, Omar Suleiman and Shamal Malik, who just started up a company called Haruko. It was a technology company, and they had a thesis and a vision that digital assets were going to become something that had been moving from retail to being something that was going to be truly institutionalized and begin to get adopted globally. and the technology infrastructure that was needed was lagging in that space. And they had been running a hedge fund themselves that had been trading this asset class, and they'd kind of come across this need as a result of that. And being traders, saw an opportunity to make a trade and wound the fund up and started this technology company. And we've grown the firm since then. The firm's been very successful. We have over 1,000 institutional users now. We cater to traditional institutions getting into this space, as well as a lot of crypto native firms who are growing in this space as well. And I think it was mentioned earlier about the Bitcoin ETF, and that's been a really, really interesting catalyst in this industry, not just because of the institutional money it's brought in, but actually the impact it's having more fundamentally to the markets. Financial markets haven't really been disrupted in their current form in the last 30 years or so. One of the reasons I was feeling disenfranchised at the bank was innovation is just something that doesn't exist anymore. They're all being very much suffocated by compliance and regulations now they need to adhere to. The technology can't physically adhere to them. So there's a lot of time being spent just managing that. And what's been seen is that these crypto native firms that become very successful and have managed to survive through periods of chaos and volatility as this asset class has developed in making markets in these industries are now being inadvertently pulled back into traditional markets. So one of the big things the ETF has done is these same players who are making markets in things like Bitcoin are now having to make markets in equities. And all of a sudden, and now you've got a big derivatives market on IBIT as well. And in the crypto world, there's an exchange called Deribit, and anecdotally now, the volumes going through the Nasdaq on IBIT options is at the same level as Deribit as people look to get institutional exposure to this thing. And to risk manage this instrument is very interesting. It's a derivative on an equity with an underlying and a delta to a cryptocurrency, potentially with a beta to a foreign exchange. So to risk manage these things from a technology standpoint is quite difficult to do, and traditional finance companies are completely unequipped to do it. And as these crypto native firms who developed this ecosystem on much smaller cost bases with much leaner teams with far superior technology are being pulled back into those same ecosystems, they're beginning to disrupt the financial markets as we know it as well. So that's really interesting that's happened because everyone always felt like digital assets would be its own asset class, or it might come into FX, or it might come into equities. But actually what we've seen is that digital assets themselves are the generic use case. And it's actually the generic use case that everything else is slowly gravitating towards. And so it's going to be a really interesting paradigm over the next 5 to 10 years as that happens. But unfortunately, the nature of it is to kind of be at the seat, have a seat at the table as this happens. You sort of have to be participating in it now in its current form.
Thank you. And you mentioned Haruko, the two founders of Haruko. Both of them were BSc 2001, LUMS. Both of them went to Oxford. Umar did a PhD in physics and computational finance, and Shamil did a master's in economics, and they both had amazing career in the financial markets at places like Goldman Sachs and Citibank and Morgan Stanley. And I mentioned that because people like that, inspire me and make me proud of the training at LUMS, but also demonstrate some of the leadership work done by Pakistanis in this area, and people who again have very solid careers in traditional financial markets and are respected in their areas, and they left the traditional markets to work in digital finance. And again, I think it's very important for the systems and the institutions and the people in Pakistan to understand that because I think mostly digital asset space is looked as a risky cowboy area, which perhaps it was when the industry started. And that's what I was trying to allude when I said that it's a dynamic sector. And if you look at it from a snapshot of 2010, 11, 12, it might not be representative of the quality of people who are working in the sector now. Daniel, you talked about tokenization of real-world assets, and you are already working in that in gold. What are the key findings of that? How has the reception been in the markets you have launched it? How has it helped in providing financial inclusion to people?
Before I answer that, I just want to say one point. Nice to meet you, Daniel. I haven't met you before, but you made a very good point, right? People used to believe or still think that digital assets are a standalone asset class within the universe of asset classes. But the reality is, as you were saying, that every asset is going to become digitalized, right? And that's the whole point of tokenization. So actually, you have tokenized versions of every single asset class that exists today. People talk about trillions and trillions of dollars of tokenized assets coming online in the next couple of years. What we're trying to solve for is who's going to buy those assets, right? You can tokenize an asset, but the distribution of those assets is key. That's what we're doing with our licensed platform and entities globally. Zodia is an example of the tokenization and the distribution of tokenized stablecoins, right? So each fiat pair that they operate on, that's a tokenized highway, effectively. Actually, we use Zodia as well. Zodia is one of my counterparties that I trade with when we're doing transactions as well. To your question, Ali, you mentioned tokenized gold. So actually, on our platform today, one of the assets that I hold the most is tokenized gold. And the reason why it's very interesting and why people are interested to hold tokenized gold comes back to what Mohammed was saying earlier about the capability of a tokenized asset and what that means for it to be able to be held safely, but also to be able to move safely as well. If I own gold, a lot of people in Pakistan actually buy gold and hold it physically, right? I mean, in all emerging markets, because it's a hedge, obviously, to local currency, but there's security risk, there's custody risk, there's risk associated with, somebody stealing it. If you have tokenized gold, it protects a lot of those things because it's now digitized. Obviously, there's risk associated across the chain, right? There's going to be custodian risk, obviously, if you have tokenized gold. There'll be exchange risk, as somebody was asking earlier about, FTX collapsed. But to, I think, Dr. Najam's point, regulation is important. So regulated, fully compliance kind of players, that is what protects this from going wrong, basically. And that's what we're, again, trying to do. But I think aside from the tokenized gold element, I just want to talk a little bit more about the tokenization of all these asset classes, right? A lot of people in the UAE want to buy real estate in Dubai, as an example, right? Because it's an asset class that has appreciated significantly over the last decade. The only way somebody can access that would be through a tokenized way, right? And that's, again, something that we're working on. But for me, it's more than anything about accessibility, which leads to inclusion. So the inclusion part will only come when they can access it, right? I think remittances is a great use case as well, that Zodia, for example, is working on. But I think it touches everything. That's kind of the point that I want to make, is that crypto is not just Bitcoin. Although Bitcoin is the preeminent asset class in crypto, crypto is a lot more than that. It's the underlying technology that can impact literally every single element of the financial markets, and that is happening in real time. So the fact that LUMS is looking at this now is testament to your focus on trying to advance Pakistan there. But I think another gentleman on the panel, I think it was Dr. Najam, was saying that this is the time where we have to try to really grab this as an opportunity for Pakistan. Otherwise, as with other industries, we may lag behind, and we have to, everybody in this room and other people in the university need to go out and understand this sector better than our counterparts in other parts of the world if we're going to succeed it. So hopefully this center can help us in achieving that.
Absolutely. Durrani, why should we use...
Before you go to your question, I really want to add to what these two gentlemen said. Because the theme I've seen so far is everyone's trying to understand, because when we talk on panels abroad, and you've been on some of them with me as well, the room generally is way smarter than us. We're trying to explain to them that something that from our perspective here, genuinely, and we're here as well, all of us are trying to understand together that, hey, Pakistan's sitting on the precipice of an opportunity. How do we do it? But while we highlight all the risks. Mm-hmm. So what we've been talking about so far has been RWA, real world assets. That's tokenization of a car, of an apartment, of a building, of a business. And I heard this from someone, I can't remember exactly who, but he said something, he put it very clearly, and I have to bring it to the table, which he said, RWA means nothing unless regulation is backing it. Mm-hmm. It's an IOU between you and me, unless regulation says that, yes, that transaction where Durrani sold his DHA plot to Ali in tokens is now backed by the DHA authority, and there's a stamp behind as well. That does not mean that we revert back to the paperwork. It just means that the paperwork has to be digitized. So the whole premise here is, yes, RWA will emerge as a massive asset class, but regulation has to, what you did with K-Trade, taking the whole SCCP and whole Pakistan Stock Exchange model to a digitized version, we need to bring the entire regulation around every asset class to a digitized version for RWA to really play a role where people participate.
Totally. And moving to my question, which was that you work in crypto mining, or Genesis Digital does crypto mining. Why do we use what's the benefit of doing crypto mining? And I don't just mean like economic, like societal impact. I mean commercial impact. Clearly, you do it because there's a financial return from it, and so do your competitors. Can you elaborate and tell us about, is it financially profitable to do mining? Because I also hear from, as a former LUMS teacher, Khurram Hussain was arguing on a chat group that why should we use our power for mining? Why shouldn't we use it for textiles? Right. So, what's the financial return in this sector?
I respect for Hussein's opinion on many things, but usually I disagree with him on most of the things. Since LUMS, so that's and he knows it. So it's good. It's good you brought him up. I'll answer this question in a very easy, practical example that happened to us as GDA. So when Biden and Trump were fighting it out before the elections, there was a very big rumor in the crypto mining industry that, and a lot of miners are in Texas, by the way, because Texas is one of the cheapest power in the world, 3.5 cents per kilowatt hour. So you can't beat that unless you have your own secret nuclear power plant somewhere in Russia or China. You can't beat that. But so there was a whole argument that, hey, elections are coming up and they're going to put a big tax on miners. That miners take away all our power, and there's a blizzard in Texas, and there wasn't any power for hospitals, blah, blah, blah. So, in fact, that was a wrong statement as well. But so they were looking for alternatives, and we were told, hey, guys, go out, find out what other market has excess power that we can go and mine in case US puts a tax on it. And we are about to get listed in NASDAQ, but the other competitors that we have, like anyone from Marathon, Riot, and all the other Clean Spark guys, they're all listed. So they had a bigger issue because all of a sudden the stock would plummet. So everyone was looking out. So we went to PIF because I've been engaging with PIF since the Osiris days. And we went to them and they said, what is Bitcoin? What is blockchain? They were like, oh, it's crypto. And immediately their eyes glazed over. And we're like, listen, you have to stop. And that's why I keep coming back to it. Bifurcate crypto and BTC mining, or BTC itself. Crypto or Bitcoin mining is essentially infrastructure as a service. If you're building up your country for an industrial base, you have to power your grid first. When you power your grid, we all know it takes 2 to 3 years, like it did if you're very fast, like it did with Biki Baloki Haveli power plants, to set up that plant. And then you've already got these contracts that you already have these capacity payments that are happening. Industry picks up years after. Service industries or someone else or manufacturing is going to pop up a few years after when they do their feasibility saying, oh, power's cheap. Our market's there, let's put up a factory. But in the meantime, the government is losing money paying for that power plant on a take or pay contract. Bitcoin mining steps up. We say we'll take 100% of your offtake. We're not like a regular data center. A regular data center still sets up a data center and says, hey, we'll set up the data center, we'll consume all your power, but we then need to sell this data center to Google, Facebook, for them to put their data there. But in Bitcoin mining, we set up a data center, we plug in power, and we literally generate hash rate, which means processing power to generate BTC instantaneously. So we went to PIF and said, you've got excess power, you're trying to industrialize the nation, you've put billions of dollars into it, so let us come in, let us plug in our machines and start generating Bitcoin for you. And as infrastructure as a service concept came through, they said, aha, we can do this. They didn't go to the crypto advisory board, they didn't even flag the crypto advisory board because for them it was not crypto. For them it was a bunch of guys with machines who are going to come in, lock it in, take the power, generate hash rate which goes abroad into Switzerland where it turns to fiat, and they get paid in fiat as rent for that power. So they get paid. So we never flagged any crypto button there. That's another reason that Trump then came into power and said we're all pro BTC mining and we're not going to switch any taxes on these guys. And so PIF had offered us 5 cents, 5 cents plus VAT, so it became 5.5 cents. But to mainstream miners, that was still too expensive because you were getting 3.5 cents in Texas. So from a commercial standpoint, it's simply excess power anywhere in the world as long as there's a few things that are check marked. One, people think, oh, I have solar, I can put solar on Bitcoin mine. No, you can't, because uptime is a big issue. So we want typically 95% uptime, because if your computer's off because there's no sunlight, because solar is not working, that means someone else is generating that hash. So how hash works, I don't want to go into very fast basics, but there's a certain number of Bitcoin that's released to all miners every day. If it's 100 machines working globally, 100 data centers working globally, generating that hash rate or that processing power, solving that cryptography, then that 100 gets split between, or that per day 450 BTC gets split between those 100. If certain number of miners decide that no, it's too expensive, we're going to shut off our machines. So 20 shut off their machines, then those 80 get those 450 BTC a day. So luckily for us, the last man standing gets more and more BTC. So the commercial value comes into play when you have things like rate of electricity, uptime, and then regulation, the biggest one, which means, so this is the reason why Ethiopia or Nicaragua are suffering right now, because there is uncertainty that if we put up a plant and we put our machines in, is the government going to put a tax on it, or is the import duty going to go up, or are they going to change the laws or the PPAs on it? So the third part is very, very important as well. So thematically, it's important to upgrade your national infrastructure, industrial infrastructure as well. And commercially, it's important to realize that, yes, it can make you a lot of money. At the current rates, at 95 today, is 95 or something, you'd be making very good money at 4 cents, 4.5 cents. At 5.5, 6 cents, you'd be...
What kind of money are we talking about in terms of return on equity? Do you know what does the listed companies like Marathon or Phoenix?
So let's not go for the listed, because listed space has a lot of sentiment risk as well. So people take Bitcoin from a different perspective when it comes to how because I don't want to talk about my peers. And Bitcoin space is the cowboy space. So a lot of peers have skeletons in their closet. So as we were listing, we were made a lot of offers to come do a reverse takeover. And we decided not to do it because you don't know what you're buying into.
Yes, but what kind of returns are it?
So coming back to the return metrics. If I had a 100 megawatt power plant right now, and I was going to put up 100 megawatts of a data center around it, you would right now need anywhere between 128 million, give or take, or 130 million to put up your machinery, which means just your Bitcoin mining machines. You would need another 7 million odd OPEX per year to run it, which means staffing, legal fees, all of that. And then you would need a rule of thumb in the market is that for every megawatt to install it for non-machinery oriented infrastructure, which includes substations, wiring, buildings, structures, all of that, fat finger analysis is 750K per megawatt. But in a country like Pakistan, I'm assuming we've done the math a little bit, it's slightly less than that because labor would be cheaper, your cost of putting it up would be cheaper. You're talking about anywhere between 4.5, you'd make around 8 million revenue per month, and you'd make around 4 million profit per month.
Interesting. So the key point which you highlighted
was... the
was...
cost of setup is so high that you'll be paying back the whole thing 3.5 years.
Got it. And the key point you were highlighting is that when you're talking about regulation here, you're talking about power regulation. You're not talking about crypto regulation. So mining is different from crypto trading. And that's a key point because, again, often I hear when I deal with the stakeholders over here, because they merge the two, they think, oh, we can't do mining because crypto is not legal over here, but that has nothing to do. You're selling power. And if I can be selling the output
The
in the
term
international
infrastructure as a service is key. That's it. Infrastructure as a service.
Ayad, you provide off-ramp and on-ramp services in UAE in a regulated way. Often when we talk about crypto off-ramp and on-ramp, that's the place where KYC and AML is the most important because that's where people are converting their fiat, i.e. their rupees or their dollars or their dirhams into crypto. And you are, of course, owned by a very large bank. How do you ensure all of the concerns around that? How do you ensure that you don't fall into any trouble?
They have a long KYC process.
And I want to hear about that.
That went through the KYC process.
To get
So, thank you, Ali. So just think about the fact that a big global bank like Standard Chartered, who are also very active in Pakistan, owns a large percentage of a crypto company. So it's no longer valid that you can say that only obscure entities or obscure individuals are interested in digital assets, right? So it's and mine is not the only company that they've invested in. They've invested across the infrastructure. Now coming back to the question, so our friends on the previous panel articulated very nicely why Pakistan should move towards digital assets. Right? So the two questions I get asked is related to the two biggest risks, which are always touted when asked why not, right? Why should Pakistan stay away, right? Those two risks are AML, money laundering, financing of nefarious activities, and the second is capital flight, right? And those two are very valid and very relevant issues for our country. So the first one, AML and money laundering, right? So source of wealth and source of funds of any counterparty is the starting point. So very basic stuff. Who are the individuals who own that entity, UBOs, right? And I don't buy it that any UBO is very sensitive, we cannot share their details, right? So I do deal with that every day. I don't care whether it's some politician or if you can't tell me, if you can't give me a certified copy of their passport and where they made their money, then it's a problem, right? So that's a non-negotiable. Source of funds, the fiat or the any currency which is going to be used to purchase a stable coin or a Bitcoin, where those funds are coming from, right? And again, if anybody cannot answer that question, then there's a problem, right? I've heard excuses. I've said no to business as well, where it's like it's some senior official in some government. No, if you can't show me where the money is coming from, then you cannot play, right? So those are the two very basic stuff which even TradFi banks should be doing, are doing. The other is digital assets infrastructure is now advanced enough where you can, one, screen transactions, two, screen wallets, and three, monitor both things, right? So it's four aspects here. And why are they important? Any coin, because it's on blockchain, so when a coin moves from point node 1 to node 2, it leaves an irreversible stamp, let's say, right? So you can always track where that coin has been 50, 60 owners in the past, right? So there is infrastructure now which is available. We use it on a daily basis where, let's say, if I have a client who wants to sell Bitcoin and buy dirhams, when he sends me that Bitcoin, my team runs it through the software and we can track its history. And it gets flagged if that Bitcoin has been, let's say, touched a wallet which was flagged for money laundering in any country, right? So there are mechanisms to track history of a coin. So that's what you call transaction screening, right? Now the second is transaction monitoring. Monitoring is, yes, the first few transactions look fine, but you're constantly keeping an eye on your clients, and I spend a lot of time doing that, where you look for trends and odd behavior, and you sometimes it's odd, but it's very obvious as well. If you want to really look for these things, you can catch them, right? Stuff like when I onboarded a client, their balance sheet showed $5 million of net profits, right? So very basic. They suddenly start trading $10 million, $20 million of Bitcoin. It's very common sense judgment on my part to go and question where this extra money is coming from, right? And you can do that fairly quickly with the infrastructure we have. So there is a solution for the money laundering, AML, terrorism financing problem. Secondly, capital flight. Now, when you see, Ali said on and off ramp, right? So on ramp is when you're converting fiat into crypto, and off ramp is when you're converting crypto to fiat, right? The advantages currently for Pakistan when it comes to blockchain are very clearly inbound flows, right? We've got brothers and sisters in Saudi Arabia, UAE, who earn their living there and they send money to their families in Pakistan. It's a huge inbound source of foreign currency for us, right? Now, we operate in dirham to Philippine peso, corridor, African currencies, Turkish lira. Why is that important? Because let's say somebody earns 50,000 rupees a month in Pakistan and their older brother earns a lakh rupees by earning in UAE dirhams. They then have to send those lakh rupees every month to their family. Currently, they use banks or money exchange services who charge them a hefty fee on top. And then there is an FX spread, which you can't tell, right? But it's hefty as well, right? So the families back here are losing out on that, right? So using stable coins you can make this transfer cheaper, faster, and more reliable, right? And it's extremely important because there'll be more rupees saved up for the families to spend on the economy as well, as opposed to those rupees going into the company's profitability. This is an extremely relevant subject for Pakistan, right? So just to share the flow, so let's say from dirhams, there's a counterparty in UAE who would convert the dirhams to USDT, a regulated counterparty. That's what we do. Those USDT are then sent to a regulated Pakistani payment company exchange who receives those USDT, converts it to Pakistani rupees, and sends it in the family's bank account, right? Now, the Pakistan part of it can very easily be regulated, ring-fenced. The authorities can choose the partners they want to work with, set it up themselves. There are many ways to do it, but the starting point has to be inbound only, right? And the one small point, with all due respect, I would highlight from the first panel is I wouldn't rush, right? It's important we do this properly. You rush it, the regulations are half-baked. You try and make the experience user-friendly. So many times I get asked this question, yeah, you asked for too many documents. Why do you care? Why do you have to certify my passport? All these little things, these should be non-negotiable. So you take the risk of annoying a few people, but you do it the right way. And there's the opportunity from a Pakistani point of view. And then obviously all the things highlighted before where why the country needs to adopt a more positive policy. But remittances is the key from a normal Pakistani point of view. And one last point, the capital flight is also a rich person's problem, right? You have a lot of money, you want to save it, and you'll send it to Dubai and buy $1 million apartment, right? The average person in Pakistan is not even concerned about sending money abroad and investing in a foreign asset. They have basic issues, right? So if we can increase the net rupees they receive from their family abroad, they can then buy a fridge. They can then buy an AC, right? So these are these basic needs. So they're not your capital flight threat. So it's relevant to keep in mind who you're trying to serve. Don't ruin the social impact because the relevant risks of a small minority of the population, because that can be managed.
Thank you for articulating that so clearly. And you mentioned the point about rushed. I don't think the rushed point is a function of time, because the conversations around this topic in Pakistan have happened since many years, and I've been in some of those rooms where the conversations have happened. The issue I fear is that the quality of people in that room is quite poor. It's typically either social media influencers or marketing people or even local experts who actually don't know the stuff. And so it's not the quality of time, but it's the quality of people who are imparting that knowledge, which is an issue, because otherwise it shouldn't take 10 years to learn about this. And that was, again, one of the purpose of inviting you, and I thought that you clearly explained that it's a serious approach, it's a thoughtful approach, and it's a compliant approach. And there are technology which can solve that.
Something to what Ahmed said, I would actually go out on a limb and say that crypto KYC transaction monitoring is actually even more advanced than traditional. And the reason is because of the blockchain, right? What I just described was transaction monitoring and transaction screening, which is happening because on the blockchain, you can verifiably, if you have a KYC wallet, understand where it's going, right? And that's why regulation, again, we keep talking about regulation, is incredibly important. If that is in place, it's actually more compliant than anything else. I mean, definitely than cash, than not.
And taxable for the government. So the government can make a lot of revenue from that as well.
Absolutely. And the people who trade crypto are not the people who mine crypto and are not the people who provide the infrastructure for crypto. Often I've seen that the conversation over here is with a trader who has made money in trading crypto, and they ask him, how do we do KYC and AML on this? And then clearly, Avakas Zaka, who might have made a lot of money in trading crypto, is not the right person to talk about the compliance of crypto. And Haruko does provide this technology solution to financial institutions for crypto. So can you add on this? How is crypto more compliant and more secure from a regulatory perspective than fiat?
Sure. Yeah. I mean, the point that was just made around kind of the transparency of crypto being very relevant is a point well made. I mean, if you kind of distill down what any regulatory framework really is, you kind of have the regime, then you have adherence to the regime. And in traditional finance, they're still to this day struggling with the regime. There are still panels and working groups trying to work out the minutiae of how certain asset classes should behave from a regulatory perspective. And then the transparency of adhering to that regime is very convoluted. Financial institutions are having to do reporting to regulators. They have these huge transaction stacks they're trying to sift through to work out what's actually happening in that market. Actually seeing what's happening in this market is very clear because you can see everything immutably on the blockchain. When Bybit had its hack a few months back, everyone was able to track every transaction as a result of that hack and where it went to. And if you then have it all the way back to if every single wallet address was within a regulatory regime that had KYC and AML, so everyone knew knowledge of those wallet addresses, no one would be able to off-ramp those funds in the first place without knowing exactly who they were. And so these things all become part of that framework. And what we've done at Haruko is we've built institutional grade infrastructure that creates this view of risk that is clear and transparent. And we have firms on both from traditional finance and crypto native who are using us in conjunction with regulators. I've got a few anecdotal examples. We had a hedge fund based out in the US. They got audited by the NFA. All they did was give the NFA a login to their instance of Haruko, and they were able to see every single trade they'd ever done, who they'd done it with, when they'd done it, and it was all completely audited. So the transparency of that was very, very clear. As now the US has become a more crypto-friendly regime in general, there is great adoption happening in the US right now. We're in conversations with a couple of listed SPACs who are looking to follow the strategy model of putting crypto into their treasuries, onto their balance sheet. And the first thing they're doing is coming and talking to us because they need to be able to demonstrate to their own regulators regulatory adherence. So I guess the point I'm trying to make is transparency is kind of there already. And in some ways, that's a head start. The challenge is actually having the regime in the first place to adhere to. And so you solve this problem, this part of the pie, which arguably is often the case, the harder bit to do, is already well positioned.
Thank you. Do we have questions from the audience? Faisal. And then we'll move on.
By the way, great panel. I learned a lot as well. So one of the concerns I have as a Pakistani as well is, as you mentioned, it's about it's a bearer's asset, right? Once-time mining. And so, Durrani, I'd love to get your point of view on this as well.
So, look, I mean, at the end of the day, we know that a net importer of energy is going to be a weaker currency, right? So, as a human being, I'm going to hedge and protect my assets and try to get them out of the country if the governance I'm struggling to, if I feel like the governance is weak. So, once people are allowed to mine it, and now they have the asset itself, the incentive to take it out of the country is pretty high. And then I think eventually it'll the nature of this asset, it's like a sponge. So by default, it'll suck up all the liquidity and then your traditional markets will collapse. So I get the remittance flow element through stable coins, but that's really just helping the US Treasury demand at the end of the day, right? It's just replacing the dollar from the analog dollar to the digital dollar through the private sector, Goldman Sachs, USDC, and Tether, USDT, right? But I'm still struggling to understand that how Pakistan, if we legalize crypto mining, is going to be able to stop people from taking it abroad. I get there's technology out there, but we do know that it's not easy to enforce in this country.
So, good question, but I'll break that into two parts. Because you said if people are allowed to mine it, then they'll take it out. In the first instance, the people who are mining it are only two sets of people. Either it's the government itself, which I'm a big proponent of. The government should do self-mining because the government should hedge itself against rupee falling, dollar falling, everything else falling as well. And that's where most of the sovereigns their minds at right now. Because Trump made it very clear, US is going to have a strategic reserve for Bitcoin, so should everyone else. China's already doing it. Singapore's doing it to the extent where it became such a big amount on their balance sheet that they had to show it legally. They were doing it quietly at the back end. So now we've gone over that hump. The state must do it to protect itself in the long run. Thank God Mohammed just walked in because he's a big proponent of that. He's been talking to Turkey for a while for doing that as well. And now we were discussing this earlier that Pakistan should definitely do it. So the first set being the government. The government should do it. The government should bring it's not GDA, there's so many out there, or others as well, consultants to help them learn how to do it and then position itself as net keeper of Bitcoin, not just seller of power. Because if you're just selling power for dollar, yeah, you're just a renter model. you're not really keeping the asset that's going to go up in the long term.
But Durrani, what's the difference between that and exports? If I use Pakistan wants to encourage exports.
Because you're earning in dollars.
Yeah, exactly. So here you're earning in dollars. So let me export Bitcoin if I'm generating it with rupees, because that's what is called exports.
Yes, but you're
Why is
taking
that a
one
bad
step.
thing?
I'm taking two steps. I'm saying dollar itself is like rupee as well.
Yeah.
Dollar is losing value. So why do you want to export something and get a currency which, like our last panel already discussed, is going to lose value? So the government should actually own the Bitcoin, which is going to be the value currency down the line, and hold it. And then I must profess this one book, Bitcoin Standard by Professor Saifuddin Ammous. It talks about this. It talks about fiat wealth and value wealth. And Pakistan should invest in value wealth. So now coming back to the question, the second part is the people who might come in are functionaries like us, who say, hey, we'd like to do it, so the common man can't do it. It's just become too expensive. It's become institutionalized to the grade where it can only be done at scale, which is billions of dollars, or hundreds of millions of dollars at least. So if you're talking about that level, then functionaries like us can come in and say, hey, government, we'll do it for you, but we'll charge X dollars, like you said, you'll export power. That can also happen. But again, within that remains different models that the government can adopt. Government can take a partnership model where they subsidize the cost of electricity and help build out the power infrastructure itself. That way they get to keep half, let's say, assume whatever the percentage may be, they get to keep a certain part of Bitcoin with the government national reserve. Now that was a question about mining and how mining pool creates this value which can retain within the country. Take that apart and bring it to second question, how dollar can leave the country because now people have Bitcoin and they can trade it out. That's a completely different discussion. In that discussion, we're talking about a market where people have Bitcoin that they've transacted or they've bought or they've traded upon, and now they have that wealth. How do you stop that from going abroad? And that's a discussion you guys are having right now with Stacks and at Binance, I believe, as well, where they're trying to create a ring-fence solution which goes fiat, rupee to BTC, BTC to rupee.
Like a gated exchange.
Like a gated exchange, just like UAE.
Like South Korea.
Fuse has done, and so I'm an investor in Fuse as well in Dubai. They've done exactly that. So on VO Bank, if anyone has a VO Bank Dubai account, on VO Bank you can go and convert AED straight to BTC and own it. And then convert it back to, my wife does it all the time, and convert it back to AED, there's no US dollar element. So it's ring fenced within AED to crypto, crypto to AED, because a normal Pakistani will do this. Why? Just to retain value of his daily wages. If he's earning 20,000 rupees and only spending 10,000 rupees, he's going to put that extra 10,000 into BTC and hold it there for a month and sell it for 15,000, hopefully. Because nothing else is happening except the rupee is depreciating, so he's holding that value in that reserve currency, so to speak. And the government should regulate that and earn taxes on it as well. So it's a win-win for everyone.
The other thing you can do is you can just limit outflow, right? So if you have limits on how much money can move out, you can also limit how much crypto can go up as well, right? A dollar value on how much can go up. A KYC exchange or proper regulated exchange would have to adhere to that. That's not difficult to do.
I mean, you'd have to implement chain analysis and multiple other tools.
Not necessarily. With a centralized exchange, you can just have limits, like literally a limit blocking somebody from transferring more than $500 a month or a year. Like it's the same way a bank would limit you to spend
ATM machine withdrawal.
Yeah. Or
again, the premise is a gated exchange because if
you
withdraw,
that's the way.
you can't track it.
Otherwise, it would be a sponge, like you said.
Just one more point as well. So the step which can be regulated is the step when you're moving from fiat to crypto. Once it's in crypto, then your options are limited. All right. So of all the things I mentioned before about regulating the fiat leg, it's also important to make sure cash cannot be converted to Bitcoin. Right. So again, it's a very basic thing, but I don't touch cash at all. And I say no to gigantic amounts of business which can propel my company to great heights. But cash means trouble. If somebody cannot take the cash and put it in a bank account, you need to be asking a lot of questions. So I just want to make that point as well, because it's very important for our economy as well. Say no to cash.